All right, guys. Good evening, good morning, whenever you're watching this video. So today, I'm going to jump right into the topic of today. So if you don't understand anything right now, replay the video, then rewatch the video so that you understand everything. So today we are going to be talking about entry models, reclaim blocks, and key levels. Entry models, reclaim block, and key levels. Now, from what I've taught you initially, all these things, these ones I'm teaching you now is just going to make you really understand, when you mark your discount zone, your demand and supply zone, you mark your discount zone. And when price gets to your discount zone, this is what you should be looking for. Entry models, how do you enter from your discount zone, and what you should be looking out for on your discount zone. Now, if you don't see this setup or this formation on your discount zone, there is no need to just enter the market. You wait patiently. Now, there are different types of entry models. So I'm going to be giving you two or three. So I'm going to be giving you two or three. We have the flip. I think I didn't even add that one. We have the flip entry, right? We have the flip entry. I think let me just quickly add it, or let me explain. When I get to that point, I'll draw the annotation for it. So the first one is liquidity sweep and a break of structure. Now, when price, just like I told you, when price gets to your discount level on your 4 hours, on your 2 hours or 4 hours, you have a break of structure, right? You have a break of structure. Then maybe on your 2 hours, that break of structure turns to maybe a liquidity sweep, then a break of structure, right? What do? If this is you can still pick this on your 4 hours, but most times I don't really use 4 hours to mark my discount zone. Most times I use 2 hours, right? So if this happens on your 2 hours, you get a break of structure on your 2 hours, or even on your 4 hours. How should you pick your discount zone? You know what I told you. From this level here, where price broke the 4 hour, structure, you mark, you get your midpoint in between that zone and that zone where you broke it, and the low becomes your what? Becomes your discount zone, right? This midpoint here becomes your discount zone, so you just mark it out. The same thing for the 2 hours. When you get your break of structure for the 2 hours, you mark your discount zone. The same thing, you get your discount zone here. So what you're expecting price to do is, this is just a recap of the previous video so that you will still understand. Now what you're expecting price to do, because this is your discount zone, this is your discount zone, you're expecting price to retrace a little bit, do a little bit of retracement, you know down to, because you're targeting your discount zone, right? So you're expecting price to retrace to your discount. Once price gets to your discount zone, now you switch to, remember, this all this thing, this right there is the 2 hours, this right there is the 4 hours, depending on the time frame you're using to using to do your analysis. Now on the 2 hours, supposedly we are using 2 hours time frame. On the 2 hours, you have price come down to your discount zone, then you switch to 30 minutes, 1 hour, or even 15 minutes, and now these are the entry models you're looking for. If you don't see these particular entry models that I want to talk about inside your, after price have tapped on your discount zone, if you don't see these models, there is no need to take any trade, right? There is no need to take any trade. So the first entry model is called liquidity sweep and a break of structure. A double break of structure, liquidity sweep and a double break of structure. Now the first break of structure, when price is coming down, retracing down, coming down, and tapped on your discount zone, you know, probably maybe any point around here is your discount zone, tapped on it, then give you a break of structure to the upside. The first break of structure, I call that break of structure manipulation, right? Sometimes you don't rush into the market because market can give you manipulation and come back to and sweep this low, right? So you wait patiently to get a double break to give you a confirmation. So when you get your break of structure, which is the manipulation, you wait for the second break of structure, which confirms that price actually wants to go up. Trading is a game of patience. You have to have patience to, you know, before you can make profit. You don't just jump into any trade. So when you get the second break, that's when you start to look for your entry, where to enter from. Now, once you see this formation, in fact, let me just make it plain for you. Let me make it simple for you. Anytime you see a double break of structure after price has mitigated your what? Your discount zone. If this is your discount zone and price gave you something like this, right? Give you a sweep, a manipulation. Anytime you see a double break after price have mitigated your discount zone, that is telling you that this second break, right? That is telling you that price actually wants to go up. So you should be looking for entry below this low here. Below this low. You should be looking for entry below this low. And the perfect zone to look for entry is this is the demand zone here, right? There will be a block. There will be a demand block here or supply block if the reverse is the case. Right. So price will tend to, just like I'm explaining here, price will tend to drop down, tap under your block, and continue the upward movement to the higher time frame um take profit, which is we're looking at. So there are different forms each it might happen. This is the first way. It might just give you a simple, structure like this, and you get the double break. Then you see price tap on your block and give you your buy to the up. Or the second part is this one now. Let's look at this one. This one price was coming down, gave a sweep. Price gave a sweep, right, at our discount zone. Then price gave a manipulation after the sweep. Gave a manipulation, right? Then price did as if it was coming down, went up again, then gave another sweep. Some people might think that because this sweep have happened, you know, price has already tapped and started moving, because sometimes price might even give you another break of structure again to the upside. You understand? But you must get at least double, at least two. Price can give you more break to the upside, but at least you get two. For you to get, if you get two, that confirms that this demand zone here would apply. If you only get one break of structure, if you only get this one break and you go and enter here, price might just mess you up and still go your direction, can still come down, sweep you out, and still now go your direction, and you have lost that trade, right? You've lost this trade. That's why you have to be patient. So you have to be very, very patient. Now this is one of the entry models. I call it the manipulation entry model. You must get a manipulation, a sweep, a break to the upside, which is a manipulation, and another break, double break, right? Double break entry model, which I also call manipulation model. Now the second one is called, I don't really have a name for it, but it's still a double break. Now after price have manipulated, price was coming down to your discount level. This is your discount level. Price swept, tapped on your discount level, and price was about going up. Okay, this is actually the flip model, right? This is actually the flip model. What's it called? The flip entry. So price was, I don't know, just watch my mouse, right? Price swept and failed to break at once, failed to break this high at once. Went to the supply zone here, tapped on the supply zone, right? Price will tap here, sorry. This is actually the flip entry model. Yeah, price will tap on the supply zone. It will fail to break it entirely. It will tap there, come back to this demand zone that it created previously. Inside to come back to the demand zone, and price will now break. Now there are two types of flip entry. This is the first model. Now on this first model, you watch closely what price is doing, because it can be very tricky, right? The flip entry can be very tricky. So this is what you'll be watching. I would even advise you to switch to the line chart. Like me, I have my line chart already. I can just switch over to the line chart and watch these entry models. You only take entries on your 15 minutes, 30 minutes, maybe 45 minutes, and highest you can take your entry is 1 hour. You don't take entries on 2 hours. It means it's, you can also take entry for 2 hours, but your stop loss will be very large. You understand? Your stop loss will be very large. So you don't take entry from your 2 hours. So this is the flip entry. So you have the flip, and you have the second break. Now when that second break happens, watch what happened. If price, if as price is going up after the second break, watch this demand zone, this level. If this level mitigate, look at, with this level, because there is a supply zone here that turned demand zone. If price mitigates that level, eh, and give a break of structure, that means that zone has been what mitigated. So our entry will now be the new demand zone here, where price will now come down and take our entry. But if price fails, like on the second side, if price fails to, this is the supply zone that was mitigated, supply to demand flip. This is for bullish scenario, right? This is for bullish scenario. Now when price fails and flip, you see that this supply zone that turned demand zone, this is it here, this supply zone that turns demand zone. If you don't know about supply and demand zone, please go back to the first video to know what is a supply or a demand zone. And we also talked about supply turn and supply to demand, demand to supply. So this is a supply zone that failed and broke structure again. Now for that flip entry, you must get a double break. And but if that break, it depends on what happened on that break. If you have the low, if this low did not mitigate entirely on this, supply becomes demand zone, and maybe stop somewhere here, that low here becomes liquidity. Price will come and sweep it, because price will have to come down and mitigate this zone entirely, just as it did here in the first place, because this one price mitigated that zone before it broke structure the second time. Remember, for you to take entry, price must break structure 2 times to the direction where you want to enter, right, after mitigating your discount zone. Now this was the first break and this was the second break, then this was our entry. But it all depends on the model now that you're using. This was the first break, this was the second break, then this is entry. Now this one, because this one is a flip entry, price failed to break, mitigated the supply zone here, came down, mitigated the demand zone, then broke structure, then came again, mitigated as supply zone that failed, and now broke the second structure. Now that demand zone will now be our entry. Sometimes a price might still give another break of structure before it comes down. Like price might do this, another break of structure before it comes down, mitigate our zone, but definitely that zone is going to be mitigated before price will go up. Yeah, so that zone is going to be mitigated before price will go up. So the flip entry has two model. This is the first one, this is the second one. Remember the first one, after the double break, after price has mitigated your discount zone, price will break. You just watch whether this, after the second break, whether price mitigated the supply that turned demand. If price mitigated it, then the next demand zone will be your entry point. But if price did not mitigate it and stop at a point, at a level just close to the supply becomes demand zone, then price will tend to take that zone out, mitigate on that supply becomes demand level, and boom, you understand? That's how it works. Then the third entry point is called the purge. I call it the purge because if you have your demand zone here, there are also two types of purge. You understand? There's also two types of purge. Please get your pen and paper, watch this video and write and save this thing, and save this thing on your jotter. If you have data, you can be watching, or you download the video, you can be watching it on your own convenience. You understand? So that's the way you have to learn. So this thing repeats itself over and over and over again. So if you have this thing on your jotter and you flip and you go through it every day, you won't have to miss any trade at any point. You understand? So we have the purge. This is your discount zone where you expect price to react. Price start coming down, coming down, coming down to this point, and that purge is just like a sweep. It's not a total break. Maybe price will just sweep it with a wick, not with the body of the candle, but with a wick, with the wick of the candle. Price will sweep it and now go up. Now when you see that sweep, what happens? Sometimes price might create this very thing, this very structure before it sweeps it. The price might come down, go up. As price is coming down, failed to break, go up a little bit, then sweep, then go up and cause a structural shift. So you can just enter from the demand zone, or what I call reclaimed block. I'm going to explain reclaimed block to you. It's just the same, it's just a better way of entering your market. But sometimes and price sometimes price fails to come back to our reclaimed block, but reclaimed block is one of the best entry model to enter. You understand? So price might come back to this demand zone, mitigate probably maybe with a week, and you get your entry to the upside. This same thing happens on a sell too. It's not just for buys, but I'm using the buys to explain. I don't have much battery here, so I'll try my best to keep the video short. So we have the second purge. If I want in our purge is price will just sweep it with a wick and start going up. So if you don't see this other entry, you might see this one. So don't be confused. Don't be confused. The purge is still a purge, but after it purges it, it goes up. It creates an inducement. It does that double break, which is the first break, the second break. Then price will come down and enter. Now, what is a reclaim block? Now, these are the entry models I use. There might be more entry models in time to come. I think I taught you about the engulfing pattern. Price might mitigate your zone and give you an engulfing. In fact, when price mitigate your zone and give you engulfing, once you see engulfing candle at your zone, then price break structure, that zone automatically becomes a very, very high zone for price to come back. Go and watch the engulfing entry model, and so that you understand. So sorry, what did I do? All right, let's. Okay, so these are the entry models. Please, you can draw this thing on your jotter, get it on your jotter, your writing pad, whatever you use, and you know. So, reclaim block simply means a block that failed, but price came back to reclaim it, right? You understand? Something that failed to hold, but price came back to reclaim it. Now, how do we enter from reclaim block using all these examples that I have given? All these examples I have given. Now, this is how to enter. Now, we know reclaim, like I said, a block that failed. It might be a demand or supply zone, a supply block, right? It might be a demand zone that failed. Now, in this example, a reclaim block here. Who can spot the reclaim block? We have two reclaim blocks here. You understand? We can see so many reclaim blocks here. Now, the first reclaim block is normally when price came down and goes up like this. This block, this is our demand zone. You see how it failed? Normally, as price goes up, price is supposed to respect our demand zone and go up again. But price, it failed. Price broke it down. Understand? And now came back again, a break structure. Now this demand zone that failed to hold becomes our reclaim block. Let me expand this so that we see clearly. It's a very, 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 very powerful tool, reclaim block. I use it most of the time and I get my trade perfectly. So see what happened. This is a block here. This is a demand zone, right? This is a supply zone at the top of this little maybe 15 minutes range. Now when price came down and started going up, price came down and started going up, automatically here becomes our demand zone. But you see that demand zone failed and price broke it down. Why? That's meant to happen because our discount zone is still below that demand level. That's why price disrespected it to tap on our discount zone. You understand? Don't worry yourself. If I don't get to key levels, I will do key levels on a separate video. You understand? If I can utilize the battery here, I'll get to key level on a separate video. So when price failed that block and gave a manipulation and gave another break, this is the reclaim block we are talking about, the block that failed. So we extend it. It is price would always want to come back. You see how price would just come back, tap on our reclaim block, and boom. Sometimes price might not even come to this demand zone because there might be a demand zone. Your price might just, even price comes to it, you might miss the entry because price might just give a sniper entry and you might not be tagged in. But if you enter through the reclaim block, you'll be tagged in and price will go shoot off. You understand? Now, where is our second reclaim block? In this same place, right? If you're careful, you see this is a demand zone also that failed, right? Normally when price goes up like this, price is supposed to respect this demand zone and go up again, but price disrespected it failed and price goes up. So this becomes our second reclaim block. Now most times what price will do is price will just go up like this, right? Come back, tap on that reclaim block, and boom, price will start to go up. Or most times price might just still break here, break this zone. So price might just be, it might not give you a particular kind of way, but it might just be dynamic, you know how, I don't know the words to use, but price might just come. But you know one thing you should be sure is that this reclaim block will always be respected. So this is the reclaim block we are talking about. Is the block that failed, the price came back to reclaim. You see how this block failed, this very block, this demand zone, it failed, price shoot past it, broke it again, and came back to reclaim it. Same thing that happened here. Price broke it two times. In fact, okay, let's just say it's a demand zone that got disrespected twice. You see this demand zone disrespected it again, came back, tap, and this one again, price disrespected it again, came back, boom. You see, that's just the movement. That is reclaim block, and it happens everywhere. It happens everywhere. Even this one that I gave to you here. Now that's why sometimes price in this second example that I give you, people might think price will come and respect here because people might think this is reclaim block. But no, this is actually not it, because price has not given you the second break of structure. But price will want to confuse some new traders, and they'll think yes, price will come here, and this is what price broke it entirely. So but for we smart traders and informed traders, we know that there's a block here that failed, that got disrespected two times. There's a demand zone here, price expected it first, second time, price will just extend that block, that demand zone. Price must surely come back to it and tap and give you. So this is known as our reclaimed block. So that is just reclaim block. You can go to YouTube and do your other research, but this is the simplest example or explanation I'm going to give to you about reclaimed block. You understand? Same thing here. Same thing. Where is it? Okay, see what happened here. Even in this place, but I will advise you to take this reclaim block because it's not a confirmed entry, right? When price disrespected it again, came back, then boom. But I won't advise you to take this one because this one will be kind of risky, because price might do anything. You've not gotten the double break, right? But you can take this one because you can take this one. This one now, this one is actually a supply zone. A supply zone that got distressed. Okay, this is not a reclaim block. It's not a reclaim block. It's just a supply that becomes a demand zone, right? Then let's see if we can get a reclaim block here. Okay, we have a reclaim block here. This is a demand zone that's supposed to hold. Remember, this is a purge. Price came, respected the demand zone initially, then broke it and it failed. Now price broke it and now broke here again. So what? Here now becomes our new zone, new reclaim block zone. Price will come back, tap on it and go. So while you're trading and you're looking out for demand zone, you should also be looking out for reclaim block zone, because most times price will respect the reclaim block at the 50% and it will just leave you, and you'll be like, you missed out on a trade. But actually you did not miss out. It's because you were not careful enough to know about reclaim block. This is also one of the example. This is a demand zone that got disrespected, right? Supposed to hold, but price wicked it. It was a purge. Price purged it, purged it, broke it again, and you just extend it and wait for price to come. You understand? And that's what price will just do. So that is reclaim block for you. That is reclaim block for you. So if you don't understand any of this, please rewatch the video, and if you still don't understand, please ask me questions and I'll be willing to give you more explanation about the entry models and the claim blocks and so forth and so on. Now key levels. Let's see what we can do. This is how many percentage. Alright, let me just give you an example. Key levels. How do I use key levels? I use key levels only on 4 hours. Why? You can if you are like me, I don't trade more than the 4 hours, but if you want to trade, if you want to do analysis from weekly or even monthly time frame, you are allowed. You're allowed to do. But I'm going to teach you what me I know, what works for me. That's what I'm teaching you. So I only trade from the 4 hours downwards. Sometimes I might use the daily time frame to check one or two, but I don't really go beyond that. You understand? So you just the now for you to use key levels, we have two types. We have three types of key levels. We have the A-shaped key level. We have the A. Sorry, let me delete this. We have three types of key levels. We have the A-shaped key level. We have the V-shaped key level. Sorry. Okay, and we have the open and close. Now the open and close, it's just about the candles. So you look at it using the candles, right? The open and close. Let me quickly do this. So if you have two candles overlapping each other like this, so this level here is called the open and close, because what happened here, okay, let me just explain from the A-shaped key level. This is a key level. This at this top here, you see this V that looks like an A, at that topmost side. That is a key level. Understand? And what is a key level? A key level is an area where you expect price to react. So probably if you mark your key levels, then you begin to watch price. You expect price to react as price is coming. You expect price to react at your key level. You're not expected to do anything on your key level. It's just to watch price react. Key level is just like the the discount zone I taught you. It's just a level for you to watch price do reaction. So when you now see the reaction, you now switch to your lower time frame and look for entries, right? So that's only what you just do, and it's going to help you while you're using your discount zone, to check for levels. You're also using key levels to also look at how price will react. Now if you're on a 4 hours, if you're on a 4 hours and you see a key level on 4 hours, you must wait for that 4 hours level to react. Price will give you a rejection. You must see, your candle rejection. It will tap on it and reject. Price will tap on that key level and reject. But if price does not reject with a wick, then that key level has failed. So price must tap on your key level and give you a rejection if it's on a 4 hour. because it is only 4 hour I use. Now let me just go to the chart and show you what I mean. Now to know or to check your key level, you have to change your chart to what's it called, to a line chart, right? You have to change it and you have to switch to 4 hours. Now look at what I have marked already previously. Did I tell you? We have a shape key level and we have the V shape key level. Understand? Now on the 4 hours, what we are doing is we are looking at how price will react on each key levels on our 4 hours, and looking at this let me start from here. This is an A shape key level. Okay, just give me one moment. Okay, so this is on the 4 hours. We are trying to go back on. We're just trying to go back to see our key level proper. We have a lot of levels to look out for, like on the 4 hours. Now, because that's just the way I trade, I don't trade more than that. But you can go to monthly, you can go to weekly, you can go to daily to look out for key levels, and so forth and so on. Now, when price is going up, let me delete this. Now price went up like this, right, and came down and broke it. Where is our key level? Looking at this structure, this is our A shape key level. We'll just mark it, right? We'll mark the key level, bam. And you see how when price broke it, price came down to react at that key level, right? We saw reaction at that key level and price broke the structure again. Now as a trader, every key level is very, very important. Every A shape or V shape key level is very important for you for market. It might be an advanced, something for you, but I just thought that you should know about these key levels because it's very important. Now, once a key level is respected, see how this level got respected and started going up, price started shooting up and broke a structure and broke another key level. And price broke this A-shaped key level, right? Price broke it. See how price came back to the demand zone of this other key level. If you go to the candlestick, see how price, okay, even if we even extend this key level, we extend this one that got respected. Oh my god, see how price came. So we can this is the 4 hours, so we don't really enter from 4 hours. So what you have to do is to switch to your 30 minutes or 45 minutes or 1 hour to look for entries for the entry models I taught you. Then you enter from there, understand, and buy up. So if you want to mark your key levels, I also use key levels to after every break of structure. I taught you about discount zone after break of structure, but key levels also can be used for on 4 hours. So what you do is just switch your chart to line chart and start marking out your key levels after every break of structure. When you see a break of structure, you mark your key levels. Now when this structure goes after this break of structure, after this one, where is our key level? Where is our A shape or V shape key levels? We have two key levels now. After that break of structure, we have our what our V-shaped key level. We have our A-shaped key level. So you see how price, so we can even enter from here. From here, if we enter from that key level just at that point, you see how price would just go there and respect that key level. Oh god. Now let me go back to my you see how price respected it, like to the tip. To the tip. See how price respected it. Is that level that we marked. That when we change to line charts, okay, this is even this is even the key level here. So when I take it up a little bit, see how price respected our key level and started going up. So what am I trying to tell you? On 4 hours time frame, after every break of structure on 4 hour time frame, mark out your key levels. Mark out your key levels. That's only what you need. Meanwhile, as you're marking out your key level, because as you're marking out your key levels, you're also marking out your discount zone. After price has broken structure to the upside on 4 hours time frame, mark out your key levels. Now, when after price broke the structure, what is our key level again? We have our V-shaped key level here. We also have our A-shaped key level. Our V-shaped key level. So any one price can go and mitigate. Now let us change it again to our yes. You see how price respected was reacting on this key level. You see this V-shaped key level. See how price was reacting there. But if we mark our discount zone, if we want to get our discount zone, it is also in line with, let me change it to yeah. So if we want to mark our discount zone, just like I taught you, you see that it's almost in line with our key level. You see, in fact, it is in line with that key level that we marked. And what did I tell you? Price came there, gave a reaction. We started buying to this up to clear this high. That is what happened. So key level and that discount zone work hand in hand. But the other one is we use 2 hours to mark our, and after every break of structure on the 2 hours we mark our discount zone. But for the 4 hours, after every break of structure we mark our key levels. So those are the things that is going to help you. Sometimes price might not come down to your 2-hour discount zone, but price might just react on your key level, 4-hour key level, and start going up. That's why you have to be very, 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 very careful. Let me use the current price action to show you. Now this is our 4 hours, right? This is our 4 hours. So when price came here, give a purge. Price has now broken this a 4-hour break of structure. This entire break. So our discount zone after that break, what are we expecting? What are we expecting? We are expecting this to happen. Okay, I think that is not even the break. This is the break. This is the break here. This is not it. But after the purge, that was the break though. So this is the break here. This one I marked too. Right, that's the break. So after that break of structure on the 4 hours, normally we will just mark our discount zone. Where is our discount zone? This level right here is our discount zone. I'll continue this video again. Then where's our key levels? Where's our key levels? Now we have we have this this V-shape key level here. Watch how price came there to react. We know that price will get to our discount zone and give us reaction, but this our key level can still tell us that price will still come down to that key level and react. So for precise price action, you see how price came down to that key level and reacted and did not go beyond that point and started buying. So price bought and cleared this high, right? So now personally I think price is going to sell, but I'm not going into that. I'll do a special video on key levels again to just take this one as a snippet video of the key levels. I'll do another video explaining in details how key levels work. I'll give you examples of the three key levels I explained here: the A-shaped key levels, the V-shaped key level, and the open close key level. Right, I'll do an explanation to it. So thank you very much. I'm going to end the class here and give you details of key levels later. Thank you very much.